be a cycle involved in these arrival rates. So if volume always arrives in certain locations at certain times, the existence of those cycles inside of this matrix must exist. Because if the markets are to function, if banks are to function, they've got to have massive arrival rates of volume. And therefore, massive arrival rates of volume will happen here. And massive arrival rates of volume will happen here. And massive arrival rates of volume will happen here, yes or no? And this is more a question directly to Jack. Do you agree that massive arrival will happen here? Whether you're bullish or bearish, it doesn't make any difference. But the point is, if a massive arrival of volume happens here, if I need to get rid of that volume, that's one place that it would happen, because there's a massive arrival of volume there. And if I need to get massive arrival of volume there, I need to get rid of it there. And based on that volume story, this creates a cycle. If I can't distribute with a regular idea that there is a volume available for me to distribute into, I would never enter a trade in the first place. If I am a commercial buyer of oil and I have no idea, and a speculative buyer, let's say change it to a speculative buyer. Sorry, no, let's go with a commercial buyer. If I'm a commercial buyer of oil, physical oil, and I have no idea that somebody somewhere at a port is going to buy that oil from me, will I just buy oil and float about the Red Sea hoping not to be hit by a Houthi missile? Or do I have an idea that at a certain price at a certain time in the future, I'll be able to sell that oil for a profit? The question I'm asking is that cyclical? Well, it is cyclical because I know when that volume is available. I know when that trade is available for me. I know where that trade is. The where in the case of the oil trade is the port that I'm heading to. The time it takes to get to that port is defined. So time and price is a matrix. And if time and price is a matrix, cycles must be in some way, shape, or form involved in that matrix. To go from point 1 to point 2 in a cyclical manner is exactly how the price of options work. Because without the ability to price options based on time and price, strike price, you would never be able to price an option. So to deny the existence of cycles would ultimately be able to deny the existence of the Black-Scholes model, that certain times bring certain implied volatilities. And sometimes, of course, they're not right. We understand that. If they were right, there wouldn't be any classroom, because all that would ever happen is this would be 100% predictable, which obviously it isn't. So in that sense, there has to be a pinch of salt. If you want to use a pinch of salt, there has to be an understanding that these cycles are open to adjustment. And you might say, well, that's always going to be the case, because then you can always say, well, the cycle's changed. Well, that is exactly the reason why the cycle has changed. But we've still got to start somewhere. When you're pricing an option, you've got to start somewhere. You can't just wait till the option expires and then price it in hindsight. You've got to have a model that prices that option before the option takes place. Otherwise, there's no marketplace. There's no marketplace. We just did an exercise based on the one candle where we were able to price this 79.10. Now, we don't know that's going to happen in one candle or in 10 candles, but we've got the start of a cycle here. And if we've got the start of a cycle high here, we know that we're going to go from this price to this price. And then if this takes place, we now have the end of a cycle down here as well. We have that idea that we've got an end of cycle trade there. And if that's the case, we should be able to sell at 79.10s and we should be able to buy at 78.55s, if that is true. And we were able to sell at 79.10s and we were able to buy at 78.55s. So take from that what you like. Take from that what you like in terms of rotations. It's a cycle, it's not a cycle. It doesn't actually care. I couldn't care less whether it is or whether it isn't. The idea is that there has to be some sort of element of the price going up and down. You know, the idea that there is a time, volume, price matrix, and whether we have an ability to rotate that into a cycle allows me to at least understand that idea that the market operates in some sort of sense in a cyclical capacity. But I fully agree that if you just stick to a single cycle and think that in the future you're going to find the answer to everything, you're just an absolute buffoon. It's never going to happen, is it? You know, so I think that's the thrust of it, is that it doesn't predict with 100% accuracy. It only tries to explain a little bit about what's happened. And with the idea that it does give us a forward prediction, it does give us something to look at in the future. At least it's something for us to start working on as a basic framework for a beginning model. And that's pretty much all it does. But you know, cycles is a weird thing. I think I explained that at the beginning. It's one of those weird parts to trading that a lot of people look at it as pure voodoo science, and I get that. I fully understand that. I'm the same with any of those elements, but it's like looking at Elliott wave. I mean, Elliott wave is right. It's just when they start causing it, and you're in a lot of respects, Jack, you're agreeing with exactly what I'm saying about it. I agree that the market moves in waves, but I don't agree with the fixed outcomes that Elliott wave suggests that it might have. I don't agree with that. I agree that the market moves in cycles, but I don't agree that there is a fixed outcome that it has to sell off at that price. It has to buy into that future, because it doesn't. We know for a fine well it doesn't, but it's a starting point, at least for an analysis. And that, you could say the same is true of Elliott wave. It's a wave 5 extension. Good. Well, if that's the starting point for your analysis and you build a case around it, it's a starting point for your analysis. There's a rational why wave 5 might be an end, because the price is now massively overbought, and it's pretty likely that a wave 5 on an Elliott would also be 2 standard deviations away from the original move, possibly even 3 standard deviations away from the original move, depending upon how fast it got there. So there is a very, very clear idea that it's only a starting point for an analysis, and things change, implied volatilities change. What we've got to have the ability to do is be flexible and not marry the opinion of a cycle, for example, not marry the opinion of a balance area. What we've got to have the ability to do is be flexible enough around these cycles and around these balance areas. And that's all it is. And if you don't want to use it, don't use it. I fully understand 100% why you wouldn't want to use it. Just to bring you up to speed, guys, ECB coming out in 30 seconds. ECB in 30 seconds expected to stay on hold at 45 or 450 basis points. No data this morning of any interest whatsoever. The market's very, very quiet, but we've talked about market structure today. But of interest this afternoon on 1:30 unemployment claims. 10 seconds for the ECB, guys. Pressure at 145 today. Pressure at 145 for this data release, but 450 basis points, 100% priced in. Unchanged at 4.5, guys. Unchanged at 4.5. So unchanged at 4.5%. ECB. Just going through the statement release as well. Okay, so the pressure on this, guys, at at 1:45. At 1:30, we've got unemployment claims coming in at 217 forecast, 215 prior. And that's it. Powell testifies this afternoon. So that's going to be a very interesting one. This is the monetary policy report before the Senate Banking Committee. That's scheduled for 3 o'clock, so that's always a market mover. Please do not miss that trade, that idea, guys. 3 o'clock. It is very, very important because they get asked questions. They get asked questions that sometimes cause market reactions from these panels. So it's a very, very important red report this afternoon at 3 o'clock. Gas storage numbers at 3:30. And that's us for the day, basically. So that would take us to an end. So next up, guys, 1:30, unemployment claims US, pressure at 1:45 for the ECB, Powell at 3 o'clock. That's what the afternoon slate has for us. So